Inflation and the Fed. The last two major macro events of 2023 will greet investors in the week ahead. Now, November's Consumer Price Index CPI for short report out on Tuesday morning will offer the last piece of inflation puzzle ahead of the Federal Reserve's final policy announcement of the year due out Wednesday afternoon. A press conference with the Fed Chair Jerome Powell and the new set of economic forecasts from Fed officials for the coming years will also highlight the proceedings on Wednesday. Producer prices out Wednesday morning, retail sales set for release on Thursday, and a look at U.S. manufacturing activity on Friday also highlight the economic calendar. On the corporate side, events should be relatively sparse, with quarterly update from Costco, Adobe, and Lennar serving as the week's biggest names to report. Markets entered the week with serious momentum as all three major U.S. stock market indexes have finished the last 6 weeks with gains. For the year, the Dow Jones Industrial Average (DJI for short) is up more than 9%, while the S&P 500 is up nearly 20%. The Nasdaq Composite gained nearly 38%. The S&P 500 is now less than 5% away from its record closing high. Also, Fed on hold. At 2 p.m. Eastern Time on Wednesday, the Fed will announce its final policy decision of the year, with market pricing in a near 100% chances the central bank keeps interest rate unchanged in the range of 5.25% to 5.50% to cap 2023. Now, alongside this policy decision, Fed officials will release an updated summary of economic projections, which includes its dot plot that maps out policymakers' expectation for where interest rate could be headed in the future. Forecasts on inflation, GDP growth, and unemployment would also be released. Powell's press conference is slated to begin at 2:30 p.m. Eastern Time, with investors keen to hear how the Fed chair balances investor expectation that interest rate could begin falling as early as March. The last time Powell spoke publicly on December 1, he called the rate cut speculations premature. In quote, "It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance or to speculate on when policy might ease," Powell said on December 1 in prepared remarks at Spelman College in Atlanta. "We are prepared to tighten policy further if it becomes appropriate to do so." Investors will be watching to see if any recent data, notably the November jobs report and Tuesday's inflation reading, sways how the central bank discusses the path forward for policy. The assembled press Powell will field questions from on Wednesday will be sure to prove the Fed chair for answers about the central bank's next moves lower. But JP Morgan chief economist Michael Feroli doesn't think Powell will engage in rate cutting discussions. In quote, "At the press conference, we think Powell will try to move the conversation away from the timing of the first ease by noting that currently the committee is only considering whether they should stay on hold or tighten policy," Feroli wrote in a note to clients on Friday. Michael Pierce, lead U.S. economist at Oxford Economics, also sees Wednesday's press conference skewing slightly hawkish, indicating a bias from Powell and the Fed to keep interest rates higher for longer. In quote, "We expect the updated economic projections in the post-meeting press conference to push back against the idea that rate cuts could come onto the agenda anytime soon, emphasizing that inflation is still too strong and that risks are to the upside," Pierce wrote in a note to clients on Thursday. "If anything, we expect policymakers to err on the side of leaving rates too high for too long." Inflation progress in focus. Now, the day before the Fed's announcement, investors' attention will be focused on inflation when November's Consumer Price Index CPI is released at 8:30 a.m. Eastern Time. Economist forecast headline CPI rose 3.1% over the prior year in November, a decrease from 3.2% rise seen in October. Prices are set to be flat on a monthly basis for the second straight month. On the core basis, which stripes out the volatile food and energy categories, CPI is forecast to rise 4% over last year in November, unchanged from the increase seen a month prior. The Fed targets 2% annual inflation. Now, monthly core price increases are expected to clock in at 0.3%, an uptick from the 0.2% month-over-month increase seen in October. Similar to last month, we expect a drag on headline inflation from falling energy prices, with upward pressure remaining on the cost segment from components like owner's equivalent rent insurance, and car maintenance, as well as other services, Jefferies Economics team led by Thomas Simons wrote in a note on Friday. Tuesday's report will offer investors the first look at inflation in November after data in October showed both core CPI and core PCE, the Fed's preferred inflation measure, reached the lowest level of annual inflation since September and April 2021 respectively. Projections. Now, here's a rundown of what Wall Street expects the Fed to do with interest rates in 2024. UBS, the Fed will cut interest rate by 275 basis points. The U.S. economy will enter a recession in 2024, according to UBS, and that will spark the Fed to aggressively cut interest rate next year. The Swiss bank said in a note last month that it expects the Fed to cut rates by 275 basis points next year, which translates into a whopping 11 interest rate cut from the Fed, assuming a cut by 25 basis points each time. The Fed's cut will be a response to the forecasted U.S. recession in Q2 to Q3 2024 and the ongoing slowdown in both headline and core inflation, UBS said. UBS expects the interest rate cut to begin during the Fed's March FOMC meeting. Macquarie. Now, the Fed will cut interest rate by 225 basis points. The combination of higher interest rate and the Fed's quantitative tightening policy, which it is using to reduce the amount of bond it holds on its balance sheet, means that the monetary conditions are a lot tighter than they might appear on the surface. The San Francisco's Fed's proxy Fed fund rate is at 6.7% right now. That fact, combined with a likely continued decline in inflation thanks to a slowing rent increases, suggests to Macquarie that the Fed will cut interest rate by 225 basis points next year. The Fed hasn't yet abandoned the high for long narrative adopted in late September, but we and our economists are of the view that we may see the Fed fund rate cut by 225 basis points in 2024, Macquarie said in a note on Friday. ING Economics. Now, the Fed will cut interest rate by 150 basis points, moderating inflation. A cooling job market and a deteriorating outlook for consumer spending means the Fed may need to cut interest rate more than the market expects. We have modest growth and cooling inflation and a cooling labor market, exactly what the Fed wants to see. ING's chief international economist James Knightley, who wrote in a note last month. Now, this should confirm no need for any further Fed policy tightening, but the outlook is looking less and less favorable. Knightley says he expects the Fed will start cutting interest rate in the second quarter of next year, delivering as many as a 625 basis point rate cuts, totaling 150 basis points. He also says he expects the interest rate cut to extend into 2025 with at least 425 basis point interest rate cuts. According to the CME's Fed Watch tool, future market are pricing in rate cuts totaling 125 basis points next year. That would put the Fed fund rate in a range of 4% to 4.25% compared to the current range of 5.25% to 5.50%. Barclays. The Fed will cut interest rate by 100 basis points. Continued resilience in the economy next year will make the Fed cautious about cutting the interest rate too aggressively, according to a Monday note from Barclays. The firm expects the Fed to cut interest rate by 100 basis points next year, followed by another 100 basis points of cut in 2025. Barclays said investors are too pessimistic about the economy's continued resilience, which could fuel a return of inflation. That's why the Fed may be slow to cut interest rate throughout 2024, according to the note.